Good afternoon and welcome to this week's class here at NuView. Today we're going to discuss smart money moves and discussing private lending within your IRA. My name is Jason Sheppard. I'm an IRA Specialist here at NuView Trust. Coming up on a year in the business. Been in the industry a little bit longer than that, but here to talk to you today about private lending with that IRA account. Before we get started, as always, we want to remind NuView Trust serves only as a custodian for alternative assets and investments. We don't provide any sort of investment advice, tax advice, legal advice, anything like that, nor do we sell any investments. All of our accounts just hold alternative assets in their IRAs, ESAs, HSAs, and 401ks, all selected by the client at their discretion. So first off the top, we always like to remind everybody what is a self-directed IRA. And most of you guys on this already know about self-directed IRAs because you're here attending most of our classes. But one thing I do always want to remind you is that self-directed IRA is purely a marketing term. An IRA is an IRA, whether it's here or at any of the other more traditional custodians of these types of assets. There's no different. It's really just a matter of the opportunities that you choose to do on the back end. It's like it says here, it's purely a marketing term. There's no difference between those types of accounts. It's not really a special type of account. So as far as the types of plans that can be self-directed, both your traditional and Roth IRAs can be self-directed, and it has different coverage amounts there for you. We also have employer slash kind of small business owner plans called the Solo 401k, the SEP IRA, and the Simple IRAs. And those have their own benefits and drawbacks. If you have any questions at those, feel free to give us a call here at NuView. We'll be happy to walk through the differences and the different qualification standards for those types of accounts, because they can both be very powerful tools in your investing journey. And then lastly, we have specialty plans. So we have the education savings account, which is called a Covered L account, and a health savings account that if you have high deductible health care coverage, you can save some money tax-free. The benefits to both of those accounts, both the funds going in are tax-free, and there's no tax penalty for taking funds out of that account as long as they go towards qualifying expenses. So both powerful tools that can be invested alongside any of the other accounts. So maximizing those tax-deferred and tax-free investments that you're making all along. So once you have the account, we have several different choices for you, and we have classes weekly talking about these different asset classes for you. Real estate, everything from raw vacant land all the way up to multifamily condos and multifamily apartment buildings can be purchased with your retirement account. Real estate notes, so mortgages, things like that. And we'll be talking further about real estate notes as well as unsecured notes. Real estate options are available for you, where you purchase the option to then have that piece of property, or to purchase that piece of property, and then you can sell the options as a commodity as well. Limited liability companies, so LLCs, both similar to purchasing stock. In the stock market, you can purchase shares of a private company that's not on the stock market as well. Limited partnerships, so multifamily syndications, medical device syndications, software company syndications are all available for you there. And private stock, and a whole lot more. There's no limited. Here at NuView, we also offer the ability to invest in cryptocurrency, as well as your traditional public security assets that may be out there too. In fact, we have a class coming up in a few weeks discussing cryptocurrency and how to purchase that within your IRA. There are a few pitfalls you want to be aware of with investing with your retirement account. First and foremost is prohibited transactions. Prohibited transactions are the purchase of what the IRS has deemed a prohibited asset. Really, it falls into two main categories. That's going to be life insurance policies, because that's for not for retirement. That's for when you pass on, as well as collectibles. So memorabilia, arts, and paintings, things like that. Those are the other items. And then as far as the other categories you want to make sure you're keeping an eye on is anytime you're doing business with any of the prohibited parties. And I have a chart here going through who the IRS deems is a prohibited party, and kind of run through those with you. So mainly, here's your IRA. Obviously, the first party that's prohibited to you is yourself. You're prohibited to yourself. Essentially, your IRA is your imaginary friend. It's there alongside you. It's not you. It's alongside of you. Second is the member of your family. So that's your ancestors, both ascending and descending. So parents and grandparents on up, kids and grandkids on down. Your spouse and any of those lineal descendant family members lineal descendant spouses are disqualified. Any corporation owned directly or indirectly by the fiduciary, and any highly compensated employees, any partner 10% or more are all considered disqualified, as well as any partnerships or trusts and estates that may be involved with any of those parties. Now, the other caveat to that is it's not one of those disqualifying transactions. They're considered prohibited. However, you do have the ability to continue doing business with those individuals as long as you are very careful when you set it up. You can go into partnership with yourself. You can go into partnership with any of those prohibited parties as long as you enter and split the costs and split the profits of the proceeds along the same percentage line. So if me and my IRA were to do a deal and we split it 50-50, 50% would come from my personal funds, 50% would come from my IRA funds, and then we would split all expenses moving forward. If I were to purchase a home, purchase a property, we would split those 50-50, as well as any returns when we sold that home or rented that property would be split along those same lines. So that's one of the things to consider when you're making an investment, not just real estate, but lending, anything like that. Those two main things: prohibited purchases, prohibited parties, and being careful with those two. Any questions before we move on? Perfect. I wanted to include this chart. This just kind of shows you why investing with your IRA can be so powerful. And this is just considering a $2 investment, which, what is a $2 investment nowadays, and how it doubles and compounds each transaction, and what it looks like if you're taking 25% out of that to pay taxes. So over time, as it continues to compound, you can see the spread in between investing that same $2 and how it can grow as it continues to compound, and versus having the tax taken out every time that transaction, every time you compound that transaction. So it's an illustration to show you how having that ability to not pay taxes and using those tax advantaged accounts like the Roth and the traditional IRAs, as well as the other accounts, how it can help really add up over time and continue to grow that account in that tax-free or tax-deferred fashion from there. So moving on, let's talk about why we're here, and becoming the bank, using your IRA as a bank, and using and creating an additional asset class, especially these days with interest rates as high as they are. Writing your own loans may be beneficial because the percentage you get is already inflated by the fact that the percentage they're going to get elsewhere is high as well. So utilizing the market to get a higher rate of return is beneficial from that standpoint. First thing to know, you choose the terms. That's the best part of self-directed and everything from there. Now there are companies out there that can help negotiate these terms and may have aggregate of certain loans that you can just invest in right away. But also, if I were to lend money to a non-disqualified party, it can be a mortgage, it can be a first mortgage, or even a second mortgage on a property. You can also write in the loan for shared appreciation, to where if you're lending somebody the funds to purchase a property, and that property appreciates and doubles in value based on the loan, and they haven't satisfied the terms of your loan, you can write it in there to where the return on your investment grows with the property. You can write in prepayment penalties, so you can make sure you get the full value of the interest that you agreed on at the front. You can also write in where you charge origination points, where you get a certain percentage just to initiate the loan, almost like a down payment essentially for that loan, as well as you discuss the interest rates, and you have the opportunity to set your own interest rates. If you want to set it just below what they would get at a bank, or if you want to set it above it because they can't get approved at the bank, you have the complete control over to set those terms. The other thing you want to consider too is collateral, whether it's a secured note and it's secured by an asset. We'll touch on kind of what that looks like later on, or if you want to just set it as an unsecured note. From there's a lot of choices out there, and obviously you want to do your own due diligence to make sure that the terms you're agreeing on are market fair, but also knowing that you can set the terms as you see it. One of the other things to consider out there that a lot of clients will do is they will actually write in their annual fees to make sure those fees get recouped, to make sure that they're not losing any money as they continue to do that. So the moral of the story is you control the terms. Whatever you agree on, we're not going to tell you the terms are fair or anything like that. If you agree to them and this is what you and the borrower want to agree to, that's up to you. So just tread carefully anytime it's an unsecured note. Obviously, if the loan's not secured to anything, it makes some of the further steps that much harder from there. So the benefits to an IRA owner is it's a secured investment. It's not guaranteed, but it's secured from there. So just something to consider. You can get above average returns like we just discussed. Your standard money market fund is going to get you probably 3 to 5%. Mutual funds a little higher, but going interest rate, you may be able to write a loan at 10 or 12%, depending on your market and the type of asset and the length of time that they're gonna borrow those funds. It gives you the ability to balance between risk and reward. So there may be that trade-off where if they give you an additional few points of interest, you may be able to lend it for a little bit longer, and you control the terms, but you're able to balance that. And then the other benefit, if you're lending currently with cash and in a non-qualified account, it gives you the ability to not have to pay taxes on those incoming payments as income, because it's going into that IRA account. And the benefit also, you're never paying taxes if you are investing with that Roth account, which I know we've touched on in classes before on the benefits of using that. So we've talked about how to come up with terms. We've talked about the benefits to it. What's one of the risks? What are some of the risks? And ultimately, the biggest risk out there, worst case scenario, is having to foreclose on that property. Obviously, you hear about these terms in the news. Foreclosure just means that person hasn't paid, and now you're going to go through the process, especially if it's a collateralized loan and secured loan, how am I going to start taking possession of that property and essentially turning a negative into a positive from there. So touch real quickly on collateral. Obviously, that's properties or assets that are offered to secure the loan. If you've ever purchased a house with a mortgage, your house is the collateral. If you purchased a car, the car is a collateral. I've seen clients writing loans based on a liquor license to a bar as collateral. So there's several different items that can be used as collateral. If it's a lawn care company, maybe the equipment is collateral, or the trailer is collateral. Whatever you choose to use as collateral. One of the things to be careful though is if you're using as collateral, you want to make sure it's something that you are willing to own and eventually sell down the loan, which brings me kind of to my next point, but we'll pause there. Are there any questions here in the office before we move on?
No.
Perfect. So like I said, thing to consider from the lender's perspective, don't loan if you don't want to own, right? Because ultimately, if that borrower defaults on the loan, you are now the proud owner of whatever their collateral is from there. So only pay for repairs after you have proof and that they've been inspected. So if you are lending to somebody to fix something, or you're lending for somebody to buy a property and fix it up, you want to make sure you are not paying for those repairs until after that. Number 3 kind of goes with number 1. Don't loan unless you're willing to foreclose. That brings kind of to that next step is if you are loaning to or lending to a not necessarily close family member, but somebody that's non-disqualified to you, and you want to make sure you are not lending to those people that you're not going to want to foreclose on, because ultimately that's not going to help anybody in the long run. So friends and family, just be careful on those sorts of things. So act as soon as the loan goes into default. You do not want to wait 6 months, 8 months, a year to get your collateral back or to begin that process. The longer that is, the longer that you're not seeing that return, and the longer the foreclosure and default process could take in order to get that property over into your name. So you want to act as quickly as possible. Collect interest monthly. You don't want to set it up on an annual interest basis. You want to go ahead and make sure that's factored into that repayment and the amortization schedule, so that way you are collecting that rent, or I'm sorry, that interest as you're collecting the payments from there. So if you're unsure about the loan, like we talked about at the very beginning, number 6, ask a professional. There are companies out there that can help you draw up these. They can review credit worthiness. They can go over any of those aspects on the lender to discuss and make sure that the loan terms that you're agreeing to are fair and you're not underselling or pricing yourself out of the market. You want to make sure, especially if you are loaning for a property or anything, you want to get title insurance. Make sure that title is clear. There are no other lien holders unless you know, and it's a second mortgage. Make sure there's no additional lien holders that may come in above you, because ultimately, if that borrower does default and you're not the primary lien holder, you may not get your money back until that first lien holder has been secured. So there may be additional hazards out there. You want to make sure the proper insurance is on the property. If flood insurance is required, or you're in a floodplain, you want to make sure that is placed on the property, and also make sure that you are on there as a lien holder or an interested party to make sure, should something happen and a payment be made by the insurance company, you're not the person borrowing from you that may be primary on the policy doesn't just take the funds and leave you with a property that has a claim on it now, and everything from there. Number 9, insist in evidence of property tax being paid when they become due. Ultimately, you want to make sure that property doesn't get a lien placed on it for not paying property taxes. If you have any questions on that, that's another great investment tool. We've done a class on not too long ago where we talk about property liens and things like that. So if you don't want to be the direct lender and you just want to go through that, there's some good opportunities there as well on the property taxes. And then number 10, if you're lending to a business or an entity, try and get a personal guarantee. It's very important that way you have, it's not just a business that there's not much recourse on that business, but make sure you have a personal guarantee written into the contract in the event you are lending to an entity to make sure there is recourse there for you. So to sum it all up, kind of give you the cliff notes again, IRAs can loan money. It doesn't matter whether it's a traditional or a Roth. IRAs can lend and loan money. All interest and terms and points and everything you agree to, in the loan terms, just funnel back into the IRA. That's the only difference than investing with personal funds. But the benefits to it being in an IRA, it's tax deferred or tax free. There's no additional. You make all the lending rules, right? We discussed that. You set the terms, you set the interest rate, you set the points, you set everything. You have complete control over that loan. Now, one thing to consider, just like owning real estate, everything is done at arm's length. So obviously there are certain things you can do as the lender, but just like as a landlord, there's certain things a landlord, if you own a rental property with your IRA, obviously you can collect payments, but you can't go in and paint the walls, you can't do things. So make sure you're staying at arm's length. This last one, I always like this rule. Return of principal is always more important than return on principal. So make sure you're making good financial loans. You're doing your due diligence on your borrower. You're not, setting these crazy high terms just to get a good return, and you're just setting that borrower up for failure. So making sure you're getting the principal back is more important than just having that high interest rate or high return. And take control of your financial future. This is something that can be done with any of our self-directed accounts. So it gives you the opportunity to diversify your assets and everything from there. So here's what to do next. Obviously, scan the QR code. This will set an appointment with my team so we can chat a little bit further about which account makes sense for you. And then we can get you started on the process of making those investments from there. We'll get the account open, have you make a contribution, or we'll transfer funds, roll over some funds, and then make your first investment. We have both secured and unsecured note packets ready to go. So no matter which way you're structuring that loan, we have the ability ready to go for you, all done through DocuSign from there. So let me back up. Before we talk about next week, do we have any questions, Amy, either online or any here in the office?
We do have a couple from online.
Perfect.
The first one is, how can you plan to diversify your private lending investments within your IRA to manage risk?
Yeah, diversifying is always important anytime you're investing, whether you're investing in the stock market, investing in real estate or anything like that. So the first thing is, spread the funds out by the type of loan, right? Some of them can be secured, some of them can be unsecured. From there, you can change up your durations. You can have like a short term, almost like a hard money loan, to where you have the short term high interest rate, and then you can have some that are stretched out a little longer that may have a little bit different underwriting guidelines from there. Switch up collateral, like I said, secured, unsecured. You can switch it up depending on the type of asset. Like we talked about earlier, make sure it's something you don't mind owning, should you make that loan. But you can switch it up from there. But as with everything, consult a professional for guidance. If you're having any questions about diversifying, or if you're looking for any additional assistance in creating terms and kind of that creative underwriting side of it from there. So good question. What else do we have, Amy, or anybody in here?
Quinn was wondering, can I use funds from an existing IRA, or do I need to create a separate IRA for private lending?
Absolutely. No, just obviously check with a custodian like NuView. We allow private lending out of any of our accounts. So as long as it's a self-directed IRA, I know some of the traditional, more traditional asset companies may not allow for this. But no, you don't have to have a separate IRA at the correct custodian. The only reason you would have a separate IRA is if you wanted to maintain an account at one of the other traditional custodians and fiduciaries, and then you wanted to create an account here at NuView in order to private lend. So that'd be the only reason you need an additional account. But if you're looking to invest your whole portfolio or whole savings IRA savings account, there's no reason to have separate accounts, especially here at NuView. So good question. Thanks, Quinn.
And the last question from online, in the event of a default, how is the IRA protected and what recourse does the investor have?
Yeah, so typically the IRAs are protected in the event of a default. So there's not any issue on the IRA specifically. But the recourse for you as the investor depends on the terms you agreed on at the beginning. So whether or not it was a secured or unsecured note is the biggest thing. Did you have collateral tied to it? If there is collateral, then your IRA does have a claim on that collateral that you secured that to in the event of the default. So obviously understand the terms that you're agreeing on before you make that final investment and set that final agreement, because ultimately that is your recourse should that borrower default. Another thing to consider and keep in mind is that all investments carry risk. So diversifying, like we talked about in that first question from that online, is and doing your due diligence, whether that's doing it yourself, paying somebody to do that, or investing with a fund manager that may specialize in these types of note purchases. Speak with them, make sure you get in your due diligence, and understand the terms and make sure you're managing that when it comes to your personal portfolio from there. So, but good question. Are there any other ones on there, Amy?
Nope, that is all from online.
Perfect. Any here in the classroom here at the conference room? Well, perfect. Join us next week, please. We're going to kind of go back all the way to the beginning, investing on your terms, introduction to self-direction with my colleague Cora Batzik, kind of going through the 101 of self-directing before the new year, especially with the new year. A lot of people are wanting to set up accounts and get everything started before the end of the tax year. So it's important to kind of go back to the basics before the end of the year and remind of that. Another thing we're excited to talk about, we do have our annual investor retreat in February. We just recently announced it within the past few weeks, but if you haven't already seen it, AltsCon 24 will be February 22nd and 23rd here in Orlando. A lot of great speakers and a lot of great vendors here to talk to you. We want to connect. We want to give you more information. You're already spending 30 to 45 minutes on a Tuesday afternoon to visit with us and discuss alternative investing here. I want to give you the opportunity to also connect with like-minded individuals and capital raisers in your space and have that opportunity to hear it directly from some of the speakers you may not have met before and everything from that standpoint. So stay up to date with NuView. We'll be posting periodically as we get additional speakers confirmed and everything from there, but you can stay up to date, whether that's on Instagram, Twitter, LinkedIn, Facebook, TikTok, anything like that. We're always posting content from there, as well as reposting these videos and these classes should you need any of those moving forward. And lastly, I always like to talk about the charity that our leadership has created called Share the Love, where they donate the ability to give the mobility to people all across the world. I know I just heard a story from our CEO, just got back from Vietnam, donating wheelchairs there. So very great charity. Scan the QR code on your computer there to learn more and find more about if that's something you're driven to assist with and help in the donations. There's a lot of great stories there. So we appreciate you giving your time. Like I said, appreciate you taking the time on a Tuesday here in the middle of the day. If you have any questions, feel free to give us a call here at NuView. My team is standing by to assist you with any questions. Hope you have a great day.